Yes, I made over $2,000 today within a few minutes, and you are going to see how I did that in real time using order flow, and it's perfectly possible for you to do that too. But before I show you how it was done and how you can also do the same, I want to be brutally honest with you about something. And you're not going to like what I say, but that's not going to stop me saying it. Now, yes, anyone can make solid money trading, and the execution and outcome can be over in minutes, as I'm about to show you. But despite what you've been told, this business is not easy. I want you to be honest with yourself. Are you ready to take the step over from retail into institutional trading? Are you ready to move away from this self-sabotaging belief that you can do a quick analysis of some random lines on your chart and magically make money, and into a more realistic professional approach used by all institutions? So my guess is you want to do this properly. So to do that, before we even open our charts, let's first look at the biggest topic this week that all institutional traders such as myself would have been looking at: the FOMC interest rate decision. This is really important as it had a big bearing on my trade. So what happened? The FOMC raised rates as expected by 50 basis points to 4.5%. Now the market sold off on this news, but why? Now the two big things institutional traders were focusing on were the FOMC statement and the dot plot that followed. I'll explain both, then show you how they factored into my trading. Let's look at the FOMC statement. Don't worry if you're not familiar with this. We all have to start somewhere. It's a lot easier to understand than you might think. Now this statement is released at the end of the FOMC meeting and causes a market reaction, sometimes a huge reaction. As you can see here on this occasion, the statement was virtually identical to the previous statement back in early November. This fact was interpreted negatively as the market had built up an expectation that the statement would be toned down and that perhaps the Fed would signal that they were going to take their foot off the gas when it came to interest rate rises. They did no such thing, reflected in the fact the statement was left unchanged, which caught the market by surprise. Secondly, the all-important dot plot. This is simply an indication of where the FOMC members see the terminal interest rate at the end of each year for the next 3 years. Given they are the ones voting for this rate, it's obviously crucial to the market. Now at the latest meeting, the dot plot showed the committee currently see the terminal rate at 5.25% in 2023. That is higher than it was previously, but also Powell in his Q&A following the statement's release also made it clear it may not only go higher than that, but also remain there for longer. This spooked the market that perhaps the Fed may increase rates at the cost of a deeper economic slowdown. You can see, when taken as a whole, there really wasn't much good news from the statement or any particular reason for the market to go up, so it went down. This sentiment has lingered all week and factored into my reason to get short today, even though it's been over a day since the release. As you can see, we've already done a decent chunk of analysis ahead of trading that should give me or you a major advantage over the retail crowd who likely did not look at this in any detail. So now we've done that, let's get into what you've all been waiting for. How I actually made money out of this. Let's go. Okay, so time to get very serious, and we are going to do some detailed analysis now with order flow as promised. Before we do that, I just want to spend literally just a minute or two just breaking things down a little bit, because obviously it's difficult to do when the market's moving so fast. It is my live account. This is me trading today in real time. You're going to watch me actually take some trades. However, before I do that, it's always worth me breaking things down, because like I said, when things are moving fast, it's sometimes difficult to really grasp what you need to so you can take this into your own trading. A couple of things to point out, all right? This is the point of control. All that is the highest volume on the day. Very important, because it will play into things today. Okay, now first thing to remember is we're not really interested in direction. We've already decided that the market is bearish. We did all that analysis at the start. That's obviously given us a massive competitive edge. We know we want to sell the market. We're just looking for reasons that we should get into the trade now. So it's more about timing more than anything, rather than so yeah, we could not trade, but I'm not really looking for reasons to not go short and go long, for example. So my point is, one of the factors that's playing into my already decided sort of thesis to go short is, where are we trading relative to the highest volume on the day? Think about it. Let's say you are on eBay or on an auction site, could be cars, and obviously eBay is very popular, and that's the price where everyone is been trading. Then all of a sudden the price starts to shift down here, and lots of people start trading here relative to where we've been before. You're going to start becoming very comfortable with that price, and your expectation is going to be what? That we start to move away from where we were trading before, and you're going to join that, aren't you? You're going to want to be part of that process, that auction process. So that's really what's going on here. I want you to keep an eye on what happens, because not only all overnight have we been trading, don't forget it's next day after FOMC, below where the majority of volume has taken place. So not only are we now trading below where we were trading overnight, which is there, but we're continuing to move down and print a lot of volume. You're going to see this become, you see how this is got a little blue, little color shade to it? This is now going to become the new point of control. You're going to see that change color, and that really gives me some notice. So let's actually press play. Again, that would have been difficult for me to explain to you whilst it was happening. Just keep an eye on that. You see that became green, okay? That really started to capture my attention. Okay, so I noticed this little consolidation area. We've now got this new point of control. Just means on eBay or wherever it is, most of the people you were trading there, they've now moved down and they're now trading here. Now this consolidation, I'm actually looking for some absorption to happen, right? Or I notice some absorption happening. Again, apologies, let me pause this because it's very difficult to explain as it's happening in the moment. But essentially the market's moving up, but what's happening is sellers are actually absorbing all of this, all right? So sellers absorbing, all right? Now I won't go into a lot of detail about this. It's fairly straightforward. What it means is people that are interested in selling are actually taking the other side of these people buying aggressively, all right? So they're called passive sellers, essentially, all right? They'll be sitting on this side, on the offer. Again, don't worry if you're not too familiar with these things. I'm going to go over them quickly because I don't want it to be a long video. I just want to kind of introduce these concepts to you. But on here, these people selling, they're going to be sitting there absorbing these buyers. So these people may appear to be aggressive, but actually they're just buying into the same price again and again and again. And there's people selling there happy to take those orders because what? They feel that it's going to go the other way, all right? So I'm looking for that type of behavior, which is what we see here. But let's just let it play out. Very difficult to see on a thin market like this. You will see us print in this area a little bit and go nowhere. So just keep an eye for that. I've just taken my first position here, but you're going to see a little bit of this behavior now again and again. So you can see us printing there 30, just in this area, and really go nowhere. All right, so just keep an eye on that. We just keep an eye on it for about 30 seconds. Just keep an eye on us printing, constantly printing. You see in that area, not huge amounts of contracts, 26, double digits, but really just going nowhere and then starting to sell off. Okay, and there's one other way that I did notice this. There's a couple of ways, all right? It's not always going to be on the depth of market. There's another way that I did notice this. So if you look down here, the minimum delta on both of these candles, so this one and this one, the minimum delta was 2 and the minimum delta was minus 13. So very little selling, but a huge amount of buying. So 186 and 246, all right? So if you look at the ratio of buying versus selling, it was very top heavy going into really, the market didn't really move much. It just stayed in this little consolidation area, okay? And the delta was very, very strong relative to the selling. So I realize this may be quite new to a lot of you, but just want to kind of put it out there just so you can start thinking about these things, because this is actually what is driving the market lower, right? It's not any indicators or any random lines of it. It has absolutely nothing. It's actually laughable. It has absolutely nothing to do with why the market moved down. It's because there was a heavy buying here, but buyers were getting trapped essentially. So they were being absorbed by sellers. We saw a lot of that here. So, quite heavy buying in terms of a ratio, max delta versus min delta. It just means that the ratio of buying versus selling was very heavily in favor of buyers, but the market didn't move anywhere. So obviously those buyers are going to start worrying as the market starts to turn around, which is exactly what happened. And we're going to see that play out now as these buyers started to exit those positions that they bought. They just kept buying into the same price and they weren't getting paid. So obviously that was going down, which is what I wanted to see. Because don't forget, we're not here to convince ourselves we want to get short. We already know we want to get short based on some of the things that I talked about at the start of the video. So you can now see a lot of these buyers, which we saw in here, and also there were some earlier. I use a bit different techniques. Things like cumulative delta would have told me that as well. And now you can really see the market start to motor down. All right, so I'm going to fast forward it because I've introduced a lot of new concepts there that some of you may not be familiar with. Nothing to be worried about. I just want you to start thinking about these things because I want you to realize why the market actually moves, and that's nothing to do with what you think it is. It's actually to do with volume. All right, and that kind of makes sense. That's what's driving every market in the world. And if we fast forward this, took the majority of my profits off there for a 1475. It was quite a quick trade, to be honest. With the FOMC, quite a thin market. Markets were moving quite fast. I'm happy to kind of take what I usually like to take out of a day. And I did actually just quickly show you, I won't play it slowly, but I will just show you by speeding through it that later on in the day, the point of control actually shifted lower. So if you actually look here, that was 3964. The point of control actually shifted lower to 3940. So we actually had the point of control there. That was that little blue line was up here before, where the highest number of contracts were trading, or the most amount of volume took place. Can you see it now shifted lower again? And we were seeing more kind of absorbing type behavior, which I won't take you through now because again, the video wanted to try to kind of keep it as short as possible, just to kind of get you thinking about these things. And there you can see it took some more trades on and went lower, and then that was it, done for the day. So a total on this day of $2,112.50. Some new concepts there for you to think about. Hope that was useful. So if you want to see more of trading like that, watch this video here, which will continue to push you into trading the correct way.